Alright, this is analysis part 2. We're going to finish working this worksheet. We still have 7 through 10 to go through. And again, we are just analyzing these different transactions, trying to figure out what accounts we will be using for them and whether they are going to increase or decrease. So for this first one, it says, in a previous month, the business purchased supplies for $800 on account. Now the business makes a cash payment of $800 to the supplier. So we do have these words here that we need to look at. And that first word is on account. So on account, we know that means that we're either going to use accounts payable or we would be using accounts receivable. In this particular case, we had made a purchase in the previous month. So since it was a purchase in a previous month, it will be accounts payable. So one of the accounts that we will be using is the accounts payable account. The other thing we have to look at is we are making a cash payment. So the other account that will be involved in this transaction will be cash. Accounts payable is a liability account. In this case, we are paying off this liability, so that liability will be decreasing. Cash is an asset account, and we are, in fact, the cash is going out, so our cash balance would be going down. For number 8, in a previous month, the business rendered services of $5,000 to a client on account. So again, we are going to be looking at, is it accounts payable or is it accounts receivable? Keyword here is that we rendered services, which means we have provided something that is going to be part of our revenue. So we would be using the accounts receivable here because our R's stay together, revenue and receivables. And so we do have this as the accounts receivable, something we'll be using. Now it tells us that we are receiving cash from the client, so that is going to be the other part of this account, is going to be that cash account. In looking at this, accounts receivable is an asset. This asset is actually going to be going down because somebody is paying their account. Cash is also an asset. Cash is going to be the asset that will be going up here because we actually are going to be receiving the cash. For number 9, at the end of the month, the business receives a bill for utility expenses of $800 incurred during the month, but the business will pay the bill during the following month. What this means is that we are not paying it right now. So if we don't pay it right now, we still owe this. And things that we have that we owe that are our debts are going to be part of that accounts payable. So when we look at this, we will have that accounts payable. It is a liability. This liability account will be increasing because we owe more money. Why do we owe the money? Well, because of our utilities. So the other account that we will use here will be the utility expense account. That is a expense account, and this expense will be increasing. And the very last thing that we have on the analysis worksheet is at the end of the month, the business owner takes a withdrawal of $10,000. So what's happening here is that the owner is actually taking cash out of the business. Cash is an asset. It will be decreasing. Now the other thing that we look at here is, why is cash going out? Well, because the owner is taking a draw. So that's going to be that drawing account. That is a type of account that we do have as the withdrawals. And in this case, this withdrawal would be moving up and would be increasing. So this is it as far as the analysis feature of the worksheet goes. In our next video, we're actually going to look at moving one step further and actually preparing these journal entries.